I will tell you right now, some of you will not like this video. And I'll tell you, some people will disagree with me and what I have to say. But what I want to share with you today is why you should buy a house in today's market. Stick around. Hi, welcome back. My name's Joe Brown. I'm a realtor with Century 21, List with Beggins, located in South Tampa. Thank you so much for being here with me today. If it seems dark in here, it is dark and stormy outside today. So maybe it's the lighting. Hopefully the glare off my forehead isn't going to blind you. But thank you for being here with me today. So listen, as I said in the introduction, some people, even in my industry, other real estate agents, will not agree with what I'm going to tell you today. You know the story about Chicken Little, right? The sky is falling, the sky is falling. And there are people, even in the real estate industry, saying the market's going to crash. Well, listen, I hope you've been with me enough to trust me. And I even did a video about this, the impending crash. And I said it's not going to happen. And I'll put a link to that video here so you can go back just to figure out why I said that. Today I want to talk about, if you're a buyer, why you should buy now. I've been working with a lot of buyers, and I had this one lovely couple who said, listen, Joe, the market is scaring us right now, so we're just going to back away and we'll give it 6 months. And you know what? I absolutely understand that, right? However, I want to share with you some information that may change your mind. And I did share this with my clients. I said, listen, you want to back away? I totally understand. But let me tell you where I think the market is headed. And I want to go back to a video I did, I think December 31st. I gave my prediction for the real estate market 2022. And at that time, the mortgage rate was 3.22 or 3.20. And economists at that time were saying that mortgage rates could go up to 3.8 by November. Well, you know what? Right now, we're almost at 6% interest rate. So I want to share a graph, and I've talked about this before, how mortgage rates follow the 10-year Treasury. And I want to put this graph up here, and it's going to block me out, and some of you will be happy about that, right? But look at these two lines. The blue line at the bottom is the 10-year Treasury yield. And so right now it's about 3.2, 3.3%. The golden line is the mortgage rates. So you see how they're very tied together. Okay, I'm back. Did you miss me? I was still here. So here's what's going to happen. Can we predict where the 10-year Treasury yield is going to go? Well, listen, I did not stay at a Holiday Inn last night, and I'm not an economist. But let me share a couple quotes with you from different economists. So here's the first, right? You see that this is saying that most analysts expect the 10-year Treasury to go from a 3.3 to a 3.8, right? So, hi, welcome back again. Let me share another quote with you. And this one's scary. It's a very short quote, though. You see here, economists are predicting anywhere from 2.6 up to a 5. Okay, now go back to the first chart I showed you with the 10-year. And in fact, I'll put it up here just so you can see. The blue is the 10-year Treasury. Look to the far right. that's where we are today. The 10-year Treasury is 3.2, right? 3.24. Well, and now look at the orange, right? So 3.24, interest rates almost to 6. What will the mortgage rate be if the 10-year Treasury goes to a 5? I read another report, and I'm sorry I didn't clip it out to share with you, but most analysts, a lot of analysts, are predicting the 10-year Treasury to be a 4% at a point, or 4.0 for the next few years. So we're at a 3.2 right now. Some people are expecting a 4.0 for the next several years. I think if that holds true, right? If that holds true, then we may very well see mortgage rates around the 7% range. Now, I'm going to do a video about this next week, because I read an article yesterday. Home prices are falling. We'll talk about that. And in fact, I'll put a link to a video here I did, because the rise in interest rates affect what people can afford. Now, I have another chart I want to share with you here, right? So here's the scenario. There's a couple that can afford $2,400 a month. And isn't that how we buy things, right? It's what we can afford in our monthly budget. And hopefully everybody has a monthly budget. But we lay out and we say we can afford $2,400 a month for mortgage and interest, for principal and interest. Well, back in December when I did my video and mortgage rates were at 3.2, a couple could afford a loan of $555,000, right? Well, then when rates went to a 5.5, they were 5.5 just a couple weeks ago, that same family could afford a loan of $422,000. So from 555 to 422, that couple has lost $130,000 of buying power because of the rise in interest rates. Right now we're at a 6.0. That family can now afford a $400,000 loan. Well, what's the next step? Let's say we go to 6.5. You see that? $380,000. If it gets to a 7, $360,000 mortgage, right? And then I also put 7.5 in case we get to that point. So, yes, home prices are going down because what people can afford to buy has gone down. People say, listen, the money's the same. It's $2,400 a month. What's changed is the interest rate. And so people who need to sell their home are going to have to reduce the price to meet buyer demand, right? So, and we'll talk about this next week about the home prices and whether home prices are really falling. But homes have to be priced to where people can afford them. I had a beautiful rock on my desk that I got from Newfoundland. And you know what? That rock cost me, well, you could say it cost me $1,000 to get to Newfoundland, right? But I went to Witless Bay and I picked up this rock and I carried it home. Well, I wanted to sell it to somebody and said, I'll sell this rock for $10. Well, maybe a year ago somebody would pay $10 for it now, but they won't pay for it now. So I have to change what I'm asking for this rock. Well, the other option is, you know what? I'll just keep the rock. I don't need to sell it, right? The people that need to sell their homes are the ones that need to price their home appropriately. But all this to say, if you are thinking about buying a home, there could be, and this is my warning to you, there could be a danger in waiting, because the house you could afford or the value that you can afford may be less than what you can afford now, right? And hopefully the charts I showed you, the information I shared with the analysts. So go do your own research. Google, right, the forecast for the 10-year Treasury and see what those analysts do. Your own research. Because if that 10-year Treasury continues to go up, then we expect mortgage rates to continue to go up, which means what you can afford is going to go down. So if you're in the market to buy a house, this is a good time to do it, right? Unless you disagree with me and you think mortgage rates are going to fall, then yes, absolutely wait. But I want to be your trusted advisor. Listen, I'm intelligent. I read this stuff. I'm sharing with you my thoughts, my passion, my concern for where the real estate market is headed. And if you're a buyer, I want you to get the best value you can right now. Okay? Listen, check out my website, joebrownc21.com. There's a link. Send me an email. Give me your comments. Leave comments below here. If you think this is important, share this video with your friends and family, because I want to get information out there. I want you to be educated. So we can do the best job we can for everybody. Thank you so much. I really do love sharing this information with you, even though people may not agree with me, because South Tampa, Florida living is awesome.